What's up, guys? I trust you all are doing good. So, this is another review. We'll be looking at price action and we'll be studying price behaviors together, right? Using fair value gaps and the rest. So, I've seen a whole lot of mistake from some people saying because it's a bullish fair value gap and the trend is bullish, so they need to buy. That is really not 100%, even 70% correct. It's not. So you look at the behavior very importantly, how it is behaving in that fair value gap before you decide to buy, except you have more like a higher time frame analysis backing up the buy and you want to take your entry in the 1 hour. But for this specific model, because it's a bullish fair value gap, does not mean you want to buy, right? Now, this is Friday's price action review we are going to be doing. And you see, we came back to this bullish fair value gap here. You notice the common behavior. You see how this week can trade even outside 50% of the fair value gap. That's the midpoint. Consequent encroachment, as ICT would call it, but we don't want all this English right now. Just the midpoint of this fair value gap. You see how the wicks are still below that, then the body above that. So this is already an indication that it is obviously going to go for the buy side, which we all know that by now. This behavior here, whereby the body of the candlestick remains above and the wicks can do the damage. And if you go to the lower time frame, you see that this was a sell side here that was taken. I did a review for this price action right here, and for those following up, you already know that. So for Friday's price action, it came back to this bullish fair value gap, and you see how it traded to the midpoint of this bullish fair value gap. Consequent encroachment for those of you that follow ICT. You see how it traded to the midpoint of this fair value gap, and this year, this point here will be giving a whole lot of people shift in market structure to the downside or breaking market structure to the downside once we go to the lower time frame and a bearish fair value gap. So they want to enter a sell. That's a seller's trap. That's why I call it seller's trap, mohawk. So when you come to the higher time frame, like the 1 hour time frame, you would see that that is just a week and the body is staying above that bullish fair value gap. So you can trust that your entry is going to appear just around here, targeting this buy side, which I did execution, a live execution, trading these buys right here. Really not up to this buy side here, but it was really sufficient enough, right? So let's go straight up to the 1 minute. As you've seen, the midpoint respected, rejected of that, showing indication that it is pushing higher. You're seeing a lot of energy pushing higher from this midpoint of the fair value gap, bullish fair value gap from this 1 hour time frame. Now, in the 15 minutes time frame, it's going to be a little bit messy here, but I just want to show you this sell side liquidity here. All right, this is a sell side liquidity. A lot of people will see this as a breaking market structure to the downside. Remember, they have a bearish fair value gap, so they want to get in a short here without considering that this is a bullish fair value gap and there is likely going to be a reversal. Remember from the last video I made advising myself that I don't want to take a short or a sell when it has taken a sell side liquidity already, that I want to take a buy. Is the opposite of that. Once I see an indication and willingness for price to trade to the levels I wanted to trade to, right? So you see that this mohawk right here was a seller's trap, especially once you go to the higher time frame and you see that this is just a week. So you just find your entry just around above, because because it has taken a sell side, you find your entry just above the mohawk, the seller's trap, right? So you should expect that this bearish fair value gap should act as inversion, not really a bearish fair value gap anymore. You want to see it invert that and trade to the downside. This 15 minutes bearish fair value gap here. I don't need to draw that. I don't want my chart to be messy. I want to keep it a little bit cleaner because I've already messed it up right here. So the 1 minute time frame, let's just look at the entry straight up. No long talks today. So you see just here, we've taken a sell side liquidity. A lot of people will be looking for, oh, it has broken to the downside, so I want to sell short right there, but that is not your plan. You look at the higher time frame to see what you're having. This is the 50% here. So this is the 50% here, the midpoint of this bullish fair value gap it is reacting off from, and this is a bearish fair value gap if people will be looking for short here. So now because we've reacted off this, traded above it, there's a willingness that gold price is willing to trade up. Now we have this bearish fair value gap. A lot of people will be looking for short here. We had a news right here. If you see my execution, firstly I entered here for a sales to show an example of a bearish trap, because we've taken a sell side liquidity already. We've traded off this sell side here, and now this is really a trap now for people that are looking to sell short, because there's a breakout. So this here is a willingness already for it to trade to this buy side. Right, you see the execution video, attach that to this. This is already willingness for it to trade to this buy side here, and you see this is an inversion fair value gap, and also this is an order block. So the first thing you need to identify is where price is going to, and then your entry is really going to be easy once you have these factors behind that. This week here, this is just a week in a higher time frame, and it have taken a sell side that you've already built a framework for trading it. You need to just identify where the price is going to, then you find willingness, allow it to show you that it is going to trade to that place. Like this, the willingness here showing you that it's going to trade to this your objective, the buy side liquidity, then you can enter. So I entered the first sales here to show you the seller's trap, right? And sometimes permit yourself, you're not perfect, permit yourself to take some loss and make some mistakes, also misinterpret price. You're not perfect, it's going to really happen. Then you see this willingness to the upside, you see this a bullish order block here, then this a mitigation block here. The mitigation block is just an order block that trades off the bullish order block. So this bullish order block, another down close candle came back here. So this is the mitigation block. You can enter right anyway. So this is the news that happened just here, coming back to this order block again, and you see how the body of the candlestick still, you see how the body of the candlestick still stays inside it, then the wick goes outside of that. This is still an order block right here. So you can take this body, the body of this candle here, right here, this consecutive down close candle, this is still an order block. So you can take this as the order block. Let me annotate that, bullish order block. So once the news happened, it traded back to this order block. This way it got me out. Originally my stop loss would have been below here, but I just wanted to keep it here, because I did not expect the news to really come down to this order block and spike up as I showed in the execution video. But then it still came back to this bullish order block here, which is still permissible, and I got in again here at this inversion fair value gap. Once it got to this buy side, traded outside of it a little, I took some profit here and finally took my profit at this buy side. Alright, so this is just it for the trade, and so this how the entry will be like. If you are fortunate to catch it here, that will be clean, really clean to these buys. Then your stop loss should just be below this low. You can still get in right here at this inversion fair value gap, but if you are getting in at that inversion fair value gap now, you should have it like this. And I would love to see my stop loss below that inversion fair value gap and not that low. I can keep it below this low as I had in the execution video, or this inversion fair value gap right here. So this is really permissible, and I'm okay with this. So you see how, let me take the mohawk so you can see it very clearly. This is a mohawk here. So I just when I use a mohawk, just now I'm talking about a seller strap whereby the higher time frame will just be a week at that point. All right, so you know what I'm talking about anytime I say mohawk. So from this point here to this sell side liquidity in the higher time frame is just a week, reacting of the midpoint of the bullish fair value gap. That's consequent encroachment, showing you willingness to go higher. So you trust that the bullish 1 hour fair value gap is going to hold and you can enter buys from that bullish fair value gap, not just because it's a bullish fair value gap, but because it is showing you willingness that is going to respect that bullish fair value gap, seeing that it has traded off this midpoint, the midpoint of the fair value gap, rejected off that, and this is just a week here in the higher time frame, the 1 hour time frame to be precise. Coming down here, you see how it is behaving here just at this inversion fair value gap, traded back to this bullish order block, traded again another entry at this point here, this inversion fair value gap, that's another entry there, then to the buy side liquidity. So that would be a perfect and a clean trade. Alright guys, so if you find this insightful, which I trust you do find this insightful, like the video and subscribe to the YouTube channel if this is your first time of seeing the review, and also if this is your first time of seeing my reviews, you can go through the previous reviews. We are trying to build a model and a framework, something to identify, something easy that you can see on the chart, not random, something you can identify and it repeats itself over time, right? And so whenever you trade, the statistics and the probability will be in your favor. All right, so till next review, see you guys then.